Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, a young couple asking if they should jump into the market. Well, few buyers are out there buying right now. Should they act now or delay their decision?
Well, you know, it's patience is going to be the name of the game right now for pretty much everybody, Jim, when it comes to buying a house. Of course, if you're looking to cash out, you're probably not going to want to have that patience. You're probably going to want to act as quickly as you can. I mean, sadly, the advice that's out there right now for most people is probably just totally contrary to what we're talking about here today. The perspective that everybody needs to have when they're talking about when they should enter the housing market, or if they should enter the housing market, or if they should not enter the housing market at a given point in time, really needs to be looked at in the context of their lifetime of ownership. In other words, how long they're going to be a homeowner. Now, if that's a long period of time, then obviously the advice that should be given to those folks is totally different than advice that's going to be where they're talking about a short period of time. Certainly right now, a young couple who did not buy a house in February of this year, 2020, someone who simply waited till June of this year, you know, they have probably saved, I'm guessing, Jim, now, probably a year and a half of their income. So in other words, by waiting that short, 4-month period of time, and now I know, the lockdown has taken place, but regardless of that, I mean, this is reality. This has happened. This lockdown has happened. It's quickened the housing correction substantially. Those people are sitting there looking at entering the housing market today with a cost of ownership over the next 25 years. The savings that you've made by not buying in February is probably going to equate somewhere around 1 to 1.5, whatever your annual earnings are, household earnings are this year. That's the amount of money you've saved already. Now, when you put that into perspective, a full year and a half of earnings that you've saved by waiting 4 months, it's a staggering opportunity for change in your lifetime. It is a staggering opportunity. And as we move forward with the realities of the housing market as they're unrolling right now, the opportunity is that it's going to be laid out in front of people who are under 45 years of age has not been seen since the early 1990s. We simply haven't seen an opportunity like this that gets rolled out. Now, you've got to be in a position to capitalize on that opportunity. You've got to be structuring your home ownership experience, like when you enter the market, how you enter the market, the type of home that you buy, the type of mortgage that you acquire, the length of mortgage term that you acquire, where you're going to put down roots. I believe your job choice should come second. So, I mean, I just look at these things totally different today than I would have looked at them 10, 20, 30 years ago. When you step back and you look at how people have lived their lives and you apply a critical analysis to the choices they made over their lifetime, then you get to see things from a totally different viewpoint. You can go back and say, well, what if they had done this? Would that have made a difference long term? What if they had done this? What if they had done this? What if they didn't make that decision? And that's really where the answer goes back to this young couple. I mean, you think about out your way, Jim, in Vancouver, all those innocent, young home buyers who were convinced to buy a condo in 2017 when the housing market was correcting in British Columbia. But they entered the housing market because the government gave the first-time buyer incentive, which was basically a first-time condo buyer incentive for those people. That caused a few extra first-time buyers to go and enter the market. And because those first-time buyers entered the market, there was a series of trade-up sales in the sales chain that took place. You had a little short period of false belief that the housing market was turning around. But when you looked at the data at a granular level, you saw that really wasn't taking place. And this is the situation that this young couple is in today. I've just explained to you why waiting, if they hadn't bought in February in many parts of the country this year, and now the reality is as we get into the middle of May and we head into June under this lockdown, you've saved maybe a year or a year and a half of your income in lost expense over the next 25 years. Now, if you capitalize on that money today, you get a hold of a registered investment advisor, a financial wealth professional somewhere, something my firm doesn't do. So I'm giving you advice to go get advice somewhere else. People who are not going to make money based on what they're selling you, but they're based on getting money on what the advice that they're giving. And you can judge that advice going forward and say you're not going to make any more money from me if they're giving you the bad advice. But you probably could take that savings and you probably can apply it. In 25, 30 years from now, it would make a transformational change in your retirement plan's outlook. Because what I can tell your listeners is this, is that we come to these decisions too late. We come to the viewpoint of looking at our home ownership lifetime too late. We come to it at a time where we have wasted decades in making decisions that had we been provided the information, been provided the ability to vet it, we probably would have made a totally different decision. And since the whole conversation over home ownership is no different today than it was in 1980s, 1990s, 2000s, in other words, the advice that's out there is identical to what it was today. Most of it. Let's look at, I'll get off topic here quickly for this young couple, because this is a primary example to the question that you're asking. It made sense to pay down your mortgage early when your interest rate was 10%. Made more sense when it was 15 or 20%, which in the early 1980s, rates hit as high as 23% for some families. It made sense then to pay down your mortgage as quickly or as rapidly as possible. The moment interest rates drop below 10%, there's an actual number, which I'm not going to get into in the area that we use. There's a certain, which we call the natural interest rate. When the overall interest rate drops below that, it really doesn't make any sense to pay down your mortgage rapidly at all. You can continue to pay it down over the long term if you so choose, but you should be making that decision based on a financial projection that has a high degree of probability over the next 25 years. That advice today should not be given to young first-time buyers. Pay down your mortgage. That's the most important thing you can do. Well, no, it's not. Probably the most important thing you could do is invest as much money as you can to diversify your assets going forward. The vast majority of people have a problem today because they haven't diversified their assets. Their assets are dominated by home equity. And when you have home equity dominating your asset class, that means your risk is falling all on one asset class, which any financial advisor throughout history would tell you is not the right choice to make. So why do we act any differently with home ownership? Well, the only reason we act differently towards home ownership is because the home trading infrastructure in Canada is designed to benefit the stakeholders, realtors, mortgage brokers, insurance professionals, lawyers, governments through taxation. I mean, governments love when you buy houses because they keep getting to tax you without you even really realizing half the time that they're taxing you. Land transfer tax for the sake of the argument. So this young couple, should they jump into the market, we can show you today across Canada that real housing prices, meaning the identical home, is dropping in value every day. Why would you go buy an asset that's dropping in value? Let's say that the market magically does something it's never done in its history, reverse itself, because the lockdown ends. Okay, well, with each passing day, you're getting further ahead. So if it takes you a little bit longer to change your mind once things starting to get busy again, you've lost nothing. You've lost nothing at all. And for you, as a young couple, that's a good thing to have, because you want to be making your decisions based on the next 20, 25, 30, 35, 40 years of your life, because you're going to be a homeowner for that long. And it's the small changes that you make early on in your lifetime of ownership of a home that will have far-reaching impacts on the rest of your life financially. So I would recommend to any first-time buyer out there, a young couple looking to buying, or even someone in a condo who's looking to step up the property ladder, make their first step up the property ladder. The first step they made was stepping on it. Now they're making their first step up it. No, you just need to hold on, because time right now is in your favor. Landlords are going to be happy that you're paying them rent if you're renting right now. Our rent pressure is not going to be the way that you've thought it has been the last couple of years. Housing downturns, housing corrections have a beautiful way of creating a huge opportunity for those looking to get into the market and those looking to take steps up the property ladder. Right now is not the time to be doing that. Don't listen to what you're hearing in the news. Don't listen to the false opinions that are being given. The data proves that right now, if you're a first-time buyer or looking to step up the property ladder, the best choice you can make financially is to wait.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, a mature retired couple asked the same question we just discussed about getting into the market right now or delaying their decision. Does your advice change for mature buyers or retired ones?
Sure it does. Sure it does, Jim. Yeah. So as you get as you become an older homeowner, okay, so in other words, a mature homeowner, the home ownership view that you have should be totally different. There are some people who've been a homeowner now for 40, 45 years who are thinking about downsizing or maybe moving to a different, retirement lifestyle community. Okay? Those people are faced with a housing market that is now correcting. So what that means, with each passing day, that your home is not sold, you're losing money. You're not going to be able to sell your house for as much money as you could have sold it for this spring, or back in 2017 in the GTA, or back in 2016 in British Columbia. You're not going to see those. You have already lost equity, generally speaking, because mature owners own upper-tier properties, minimum executive class, and often luxury class homes, and some, although far, far fewer, ultra-luxury class homes. So those people who are looking to divest, will need to divest as quickly as possible once this lockdown ends. If you have a realtor who is able to convince an innocent buyer to trade up to your home today and pay you today's value, in most of Canada, that's going to be the best choice you could make if you want to liquidate some of your home equity. Now, there are other buyers out there, even buyers who are in the golden years of their lives, who still want to own the place they call home. There are people in their 70s and 80s who still want to buy their final home. They want to buy the home that they're going to stay in for the rest of their lives. Now, the advice to those people is totally different than the advice that you would have given the first-time buyer. Because for those people, time matters. And this is the reality that you come to accept when you have studied home ownership and you've studied families as they progress to their homes. Time matters. Time is priceless. Now, that doesn't mean that you want to make an irrational decision and waste hundreds of thousands of dollars early in a market correction. In other words, you buy the house today, in 6 months from now, the type of house that you want to buy is worth $100,000, $200,000, $300,000 less. No. You need to hold out. Hopefully, you've been holding out for a little while. So in British Columbia, hopefully that means you've gained all the drop in values from 2016 forward. In the GTA, you've gained all the drop in values from 2017 forward. In Montreal, you're going to start gaining those gains now. And, if we go to Alberta, well, you've made those gains from going back to 2012. Well, I could even go back further than that for those folks. So those people have a totally different decision to make. The question is, how much are you willing to pay for the time that you're wasting? And that is a totally different discussion, and it's a totally different perspective. You have already gained a substantial amount over the last couple of years, again, based on what I just discussed, where you're living in. And I also know that from February till now, you've gained again. I also know that over the next few months, you're even going to gain further. So for those people, starting to make plans to checking around the housing market, looking for distressed sellers to put their properties in the market, is a great idea for those people to start to consider. Because they're, generally speaking, high net worth buyers. In other words, they're going to buy a home with 50% down, or the ability to do so if they so chose to do so. I would hope they didn't, but they may choose to do that. And the point is, they have the financial wherewithal to be able to do that if they so desire. Those people have to look at this decision totally differently, because every month that you're not in that house, every season that you're not in that house, every year that you're not in that house is going to impact the quality of life that you have. And, as we get older, those days become more and more valuable. I mean, that's just the reality of it. So can you afford to lose another season? What is that loss worth to you? Okay, I'm going to lose a summer for the sake of the argument. Well, there's people who enjoy having a vegetable garden in the backyard. Okay, maybe that vegetable garden, the act of physically working in that vegetable garden, would extend your life 1 or 2 or 3 or 4 years, because you're actively out there exercising every day in something that you love. Maybe taking care of your home is going to make your mental capacity be extended for another 5 years. Maybe not living in a high-density residential building where there's lots of people there is going to mean you're going to stay healthier over the next few years. It's going to extend your life again. Those years, those seasons, those months, those days are irreplaceable. It's only, though, late in life that you start to realize that these things are irreplaceable. And many of the decisions you made in the past, why did I make that decision? So the advice for that couple is totally different than the one we had in the earlier section, Jim. First-time buyers, where they have time on their side, where, as you get older, you have less and less time on your side. The quality of life that you're able to get out of owning a home is awesome. So this is why we're in the position that we're in today. We have watched as people are led down a path that is a path designed for the sole purpose of the stakeholders benefiting from it. Now, I'm not saying that they're evil people. I'm not saying that they're deceptive, because they believe the story that they're selling themselves. But the reason that we're here today is because we look at things now from the perspective of studying these lifetimes of ownerships, and with the information we're able to gain from it. And that tells us that home ownership as a lifestyle choice improves the quality of life that you have. No one should feel guilty about paying for a higher quality of life. The beautiful part about living in a country like Canada is that you can go work, you can earn money, you can work your way up job skills, you can seek to become a higher and higher earner as you can. You can choose to move to different locations. You live in a country where our healthcare system is taxpayer funded. If you get sick, you're going to get health care. You don't have to worry about that. You don't have to save money for that. You don't have to pay a monthly insurance premium for that. You're already paying it in your taxes, as is the aggregate of the Canadian economy. We're paying into a system where we have that benefit. We have transfer payments from federal and provincial governments going back to families. You have children. It's staggering the amount of money that's coming in now to people with children in the child tax care benefit, depending on your income threshold. These are all quality of life improvements that we have in this country. The primary quality of life decision or change that anybody can make is where they live, how they live, and what they expect to get from where they live. I know from studying from home ownership, the rental myth is a myth. I understand there are people who are going to be in situations where they're going to choose to rent for their entire lives. I have no problem with that. I also have to be honest in saying that the quality of life that is offered through home ownership is uncontested for the vast majority of the Canadian population. So when I'm talking to mature couples, those looking to acquire their next home, or those looking to divest of it and move to a higher quality of life in a retirement community, I have to give them totally different advice than I give a young first-time buyer. Because house prices alone do not matter. It's how much it's going to cost you for the number of years you're going to live in the house and what kind of quality of life you're going to get for the cost you pay.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway.
Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, many comments are appearing in the news stating prices are remaining firm with sellers unwilling to bend at all. Are house prices as sticky as we've been told for decades that they are?
Sticky house price theory. That's what we call it.
They just won't budge. Yeah.
Yeah. We've heard this myth here at the office regurgitated everywhere you hear it. I understand that it makes sense as a theory, but it's a theory that you really can debunk with the data. Now, you have to work through homeowners who are selling their houses in a correcting housing market to understand why it is a falsehood. You have to study real estate data during that entire period in order to maybe acquire the knowledge that allows you to debunk it. Look, sellers adjust to the market extremely quickly. Where the sticky house price theory is, it is from the real estate brokers themselves. Because real estate brokers want to win the listing. In order to win the listing, they tell the sellers of real estate that their house is worth more than what it's worth. Subsequently, you get a house price reduction sooner or later, and the sales rep who won that listing initially by outbidding his competitor through a higher price gets their commission. The real estate brokerage won. The homeowner didn't, because generally when you're trying to catch a falling knife, you keep missing it. It keeps dropping down quicker and quicker. It takes hundreds, maybe thousands of experiences with homeowners for you to be able to explain to a homeowner how they have to move ahead of the market. But there are also homeowners who are smart. Now, this generally speaking is not a regular homeowning family. This is speculators, people caught with two houses, landlords who are looking to profit from the house price gain instead of simply being a landlord. This happens from banks via foreclosures. It happens for a whole bunch of different segment of the market. And that group moves quicker because the real estate agents, the real estate brokers, are not buying the listing in the same way. Generally, those real estate brokers are buying the listing by giving a lower commission rate to those particular group of sellers. But when you buy a listing with a regular homeowner, you do that through offers, telling them the house is worth more than what it's actually worth. This creates the sticky house price illusion, where the greedy homeowner gets blamed because they won't reduce their price. I never experienced that. So, selling thousands of homes in a housing correction, we never experienced that. We found that sellers were always responsive to looking at the data and making a logical decision on their home. Virtually everyone. I know there's outliers, but I'm going to say 95% of all home sellers are rational people. And if they're looking to get out of the market or trade down, they want to do so before they lose any equity in their home. You're competing against realtors who maybe sell one house a month, one house every 2 months, one house every 3 months, one house a year, maybe one house every 2 years. And those are the ones who are raising are causing the sticky price idea to happen, because they're buying the listing. And they're hoping that over time, the seller will start to get anxious and reduce their price, and they'll still earn the commission. That's how the system works. You have this year, so 2020, you're going to have somewhere around 160,000 realtors, meaning members of the Canadian Real Estate Association. So there are a lot more real estate sales reps in Canada than there are realtors. So that's the first thing the public has to understand. There is a percentage of licensed real estate sales reps who won't buy a membership in an MLS association. I will also tell the public, increasingly, there is a lesser and lesser need for a real estate sales rep to be a member of an MLS with all of the data that's available at your fingertips today, if you know how to access it and read it. That said, those 160,000 real estate agents are going to be fighting around somewhere around 320, 330,000 sales at the most this year, 1 and 2. In other words, on average, it's probably going to average less than 2 homes sold per real estate, per realtor in Canada this year. A realtor who is active at some time this year. Now, that's the average. There are realtors who are selling 10 houses in a month, 120 houses a year. There are teams of realtors who may sell 200 houses in a year, 300,000 houses, or 300 homes in a year. Okay? That's going to drive the average down, down, down. Remember, last year, 60% of the Canadian Real Estate Association members would not have averaged the sale during the entire year. It's going to be worse this year. They are going to do whatever they can to win the listing. They are the ones that are responsible for sticky house price theory. But let me debunk this how we always debunk anything to do with house prices. If the Smiths were going to spend $100,000 in February of this year buying a house, in August, the Smiths will still spend $100,000 if they are still in a position to buy a house. They're not going to spend $90,000. They're going to spend $100,000. And if interest rates drop between now and August, they may spend $102,000, $103,000, $105,000. But what never is reported is that the Smiths in August are going to be buying a house at $100,000 they couldn't have bought for $100,000 in February. And every single home buyer in Canada is exactly the same. They are not going to reduce the amount of money they're going to spend buying a house. They're just simply going to buy a house, higher quality house, for the same amount of money they're going to spend in February. Your local real estate board only reports on the homes that sold. Well, if the average buyer spends the exact same amount of money in August that the average buyer was going to spend in February, obviously the average selling price will be the same. No one's going to tell you that they're getting an extra $10,000. They're buying a house they couldn't have afforded to buy in February because in February it was $110,000. The fact that they can buy it for $100,000 in August is hidden. That's never reported on. The reason why the sticky price theory exists is the same reason why no one has collected our $10,000 reward. Because house prices don't change in 31 days or 30 days. They don't change in 60 days. They don't change in 90 days. What changes is that the amount of house the buyer is going to buy, they get more house or less house, one or the other. It's not ever recording the house. It's simply recording how much money the buyer is spending. The average selling price is the average purchase price. So, yes, you get the illusion of house prices being sticky because as the real estate boards did this month, April, Oh, shockingly, housing prices didn't drop. The average selling price remained virtually unchanged. Duh. Yeah. If a buyer was going to spend $100,000 in March, they're going to spend $100,000 in April. They're going to spend $100,000 in May. They're going to spend $100,000 in June, and they're going to spend $100,000 in August. They're going to actually spend that amount of money until their new T4 comes in the next year, and only then, if they got a raise, would they be able to qualify to buy a more expensive home. Guess what? Housing prices are magically sticky again, because now these people are going out and spending $105,000 because they got a raise. Real estate boards say prices. The average selling price went up to $105,000. They're not going to tell you that that couple purchased a home that would have cost them $120,000 a year ago. So the house itself actually drops in price by 13 or 14%, but the local real estate board says it's a 5% house price gain. This is the way that real estate stats are designed to work. They are designed, as the sticky price theory proves, to benefit the seller. There is not a single house price metric released to the public that was created after 2003, which I have told your listeners repeatedly on this show. There is not a single house price metric publicly available that was created when buyers could hire a real estate agent to get them the lowest price possible on a home. Every single house price metric you read was created in a legal environment where every single real estate agent in Canada, in North America, only had one option: get the seller the highest price possible. Get the seller the highest price possible. That's why sticky house price theory exists.
Ross, thank you so much for the update.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. If you have any questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.